So Greg Abel, the new CEO of Berkshire Hathaway, filed his first full 13F on May 15th. And this thing is a confession, dude. He dumped $5 billion of Visa and MasterCard. He tripled the Alphabet stake from 17 million shares to almost 58 million. He exited 16 positions in a single quarter. The man who took over from Warren Buffett, the guy whose entire brand is "I don't touch tech," just turned Berkshire into something that looks suspiciously like a tech hedge fund. And the funniest part is, Visa was having its best growth in 10 years when Abel sold it. He didn't sell a loser, bro. He sold one of the greatest investments of the 21st century at a 1,700% gain. That's not a value investor cleaning house. That's somebody who knows the music is about to change. And I can just picture the board meeting, man. Abel walks in with the new portfolio. The boomer suits are sitting there in their suspenders like, "Greg, my boy, where's the railroad money? Where's the insurance float?" And Greg's like, "Yeah, about that. We're long Google now." And one of the old guys chokes on his cherry Coke. He's like, "Greg, Warren said never invest in what you don't understand." And Greg just slides the Alphabet earnings across the table. Google Cloud growing 63% year over year. Search revenue up 19%. $109 billion in a single quarter. He's like, "I understand it just fine, Chuck. I understand 36% operating margins." The whole room goes quiet. Somebody whispers, "But what about the circle of competence?" And Greg pulls out the hyperscaler capex chart. $670 billion projected for 2026 alone. He's like, "The circle moved, gentlemen." Now here's what actually happened. The value investing you were taught in school was built by Benjamin Graham in 1934. It works on factories, railroads, steel mills, stuff with tangible assets you can count on a balance sheet. It does not work on software, data, brand, or network effects. And the top 10 companies in the S&P 500 are now almost entirely AI-adjacent tech. The index itself already made the pivot. You just didn't notice. AI-related stocks have driven 75% of S&P 500 returns since ChatGPT launched. 80% of all earnings growth, 90% of capital spending growth, and the four hyperscalers spent $321 billion building AI infrastructure last year alone. That's not a sector anymore, dude. That's the new utility grid. That's the new railroad. And the cloud providers are the toll booth, charging you per token, per inference, per GPU hour. Exactly the way the railroads charged per ton of grain in 1880. Buffett's old playbook was built to buy the toll booth. Abel just looked at the math and realized the toll booth moved. So he sold the payment rails and bought the compute rail. Now back to the wealth transfer, because here's the part that's going to make you mad. The 13F filing system gives institutional managers 45 days after the quarter ends to file. 45 days, bro. That means by the time you read about Berkshire selling Visa, that trade happened in January. You're reading a 4-month-old map of someone else's territory. The NYSE has been begging the SEC to shrink that window to 5 business days. The SEC just shrugs. Meanwhile, retail traders are still loading up on Visa as a value play because some finance influencer said Buffett owns it. Buffett doesn't own it anymore, my guy. He sold it to you. Strictly speaking, this is a wealth transfer. And what does Abel do with his money? He takes his entire $15 million salary, after taxes, and dumps every dollar back into Berkshire stock. He's not buying what he tells the public to buy. He's buying the company that just exited the public's favorite value trade. That should tell you everything. So here's what you do. You're going to stop pretending the 1990s playbook still works. You're going to look at your portfolio tonight and ask which positions are there because you researched them, and which are there because some YouTube guy in a vest told you Buffett owns it. You're going to notice that Berkshire is sitting on $397 billion in cash right now. The biggest pile in history. That's not a man who's bullish on the consumer economy. That's a man waiting. And you're going to stop confusing your father's strategy with a strategy that still works in a market where 4 companies control the rails. The retail investor is always the last person to find out the religion got canceled. The math hasn't changed. The math is the math. Berkshire ran the math, sold their own legacy positions at record gains, and quietly bought the new monopoly. You're holding the version of the playbook they just shredded. Close the app. Thanks for watching.